Hi, so this is June 1st. This is the Q&A with Eric. This is, of course, sponsored or hosted by Tria. But I have to say a disclaimer that none of the, or everything I tell you, you have your own research. Tria does not support any of the opinions or statements that I will make tonight. But do your own research. This is for entertainment purposes only, as I have to say. But it is my opinion and my opinion only. What I do in this Q&A is to share with you where I think the real estate market is heading, how I look at the real estate market as an investor. And again, if you're new here, please go sit on mute. In the bottom right corner is a text box. If you have a question that you want me to answer during this call, go ahead and fill that out down there. And then I will make sure that you can come off mute when it is. Brett, I see that you're not on mute yet, so can you mute yourself? I hear some background from your microphone, and then we can get started. Thank you, Brett. Appreciate you. Hi. So I made a bold statement the last meeting. The last meeting was also the first Monday in May, and I said that oil prices will come down before July 4th. And then on Thursday, I got super excited because we were close to getting an agreement. And I'm like, whew, my bold statement might be even coming true. So I have been watching the news with hawk eyes and, of course, trying to come up with arguments why I think the oil prices are coming down. So there are a few reasons why I think oil prices are coming down, and why is it also very important for us for oil prices to come down. I'll dive in that in a second, but you see kind of that interest rates are following the oil prices. Normally, it's been a weird market. I have to admit that, right? Because normally oil prices follow the 10-year treasury. The 10-year treasury is if the government is looking to raise money, they send out bonds. You can buy a bond, you can buy it online, and then the government is giving you an interest rate. 10-year treasury goes up. If nobody's buying a 10-year treasury or 10-year bond, then the government will raise interest rates, and then you see that interest rates will follow as well. And then if everybody's buying treasury bonds and they have a good confidence in the government again, then the government will lower interest rates, and you see that mortgage rates will follow that as well. Since the war in Iran and since the inflation, the interest rates are kind of following the oil prices. So I dove into that a little bit. Here is the latest news. There was almost an agreement over the weekend, and then Iran said today, because of Israel still going to Lebanon, that they were going to stop the negotiations, and Trump just replied an hour ago, as you can see, that Tehran has suspended the talks, and that Trump is trying to reel everybody in. So, economic outlook. Let's take a look at the numbers, how that is impacted. I have pulled up this report, the NAR, everybody. But any of this data that I'm showing you today, any of this data is available online. I do it that way to make it easy for you. You can research this as well. I follow the NAR, the National Association for Realtors, and we'll dive in. So what you see here is that in November of 25, the economic chief from NAR came out with a forecast, and he forecasted that existing homes would rise by 14% year over year. Now, as you can see, that has currently been adjusted down from 14% down to 4%. And he's actually predicting that the new home sale prices or the new homes, the number of new homes that will be sold, not as existing homes, right? This is existing homes here. New homes will stay flat. It doesn't mean that there will be no new homes sold, but year over year, he's predicting that the new home sales are staying flat. Medium home sales prices are looking to rise by 4%. That is currently on track. Mortgage rates will stay. He predicted in the 6%. Now he adjusted it to 6.5%. New job gains have been lowered by 50%, and unemployment rate has stayed the same. I'm personally surprised by the new job gains because new jobs have been very strong so far. Although that for Q1 they came out, the Census Bureau came out with new data about Q1 and has adjusted that lower. All right. So medium net worth forecast home. What is the wealth or that people are sitting on, right? Like what is the equity people are sitting on? And as you can see, if the real estate market is not turning, then everybody is just sitting on their equity, right? Like if you're not selling your home, then you're sitting on your equity. So the gap of wealth of homeowners is rising. All right, what is the biggest gain in job pre-demic? And I wanted to pull this up because Durham and Chapel Hill are on here. So what is the job additions that we have had since COVID and after COVID, and actually you see that the Chapel Durham Hill area, so the research triangles as I call it, has gained good momentum in additional jobs. What is surprising, and I dive into this number later on, what is surprising is you don't see it reflected in the particularly in the Durham market at the moment, because the Durham market, if you were at the TRIA main meeting the second, it's always on the second Thursday of the month. We had Lens Lambert there. Lens Lambert is the owner of the Resi Club, and Lens showed us a stat that I'm trying to dive into later tonight as well, is that the net migration, so new people moving into Durham, is much lower than the net migration into the Raleigh area. All right, forecasting. So here's exactly what I was talking about. In February, beginning of March, we had interest rates that hit 5.9%. When the interest rate hit 5.9%, we saw that the mortgage application jumped with more than 30%. So it was really like we have been saying all along. We have been saying since 2024 that if mortgage rate drop below 6%, then close to 2 million more people can afford a home. And that happened in March, and then the war started, and then the oil prices shot through the roof. So this is a stat that the NARC came out with the oil prices jumping up, and then the next one you see is let me see if I can, here on the same page. Here you see the oil prices going up per barrel, and then you see the 30-year mortgage rate going up as well. As a matter of fact, before the weekend, let me get the mortgage app out. So if you want to download an app on your phone, you can download the Mortgage News Daily app, and there you have the stats on the mortgage rate, which I check every day. So before the weekend, rates just dropped by 40 points by 0.4%. They dropped from 6.6 down to 6.3 to 6.4 because there was potential good news about the oil prices. Now today they jump back to 6.6% again. So we see that the mortgage rates continue to follow the oil prices. So we need, if we want to have an affordable market, I disagree with the president. We don't need 1% mortgage rates, because what happens if we have 1% mortgage rates? I can say it for myself. If you're an investor or if you're a seller, you do the same thing. I'll leave that up to you if you admit to that or not. But if mortgage rates drop to 1%, then my houses are going to rise by another 2%. A house from 1 million right now, and the rate that house might then be on the market for 1.5. So I don't.
Eric, we lost your voice. Can you repeat?
Oh, can you hear me again?
Please.
Can you guys hear me? Okay, cool. So, the 1% interest rates is not a solution, because then price will jump. We need the inflation to go down, and by inflation, we need oil prices to really come down. Anyway, here is the net job gain month by month. Here is the total payroll in March, stays pretty flat. What I really wanted to look at is these last slides. So this is year over year payroll gain. So are people getting more paid, and where are people getting the most paid, or the increase? And as you can see here on this national chart, is that North Carolina is leading the charge in payroll gain. So we are gaining a lot of momentum here. Charlotte is one of the drivers, but Raleigh is definitely a driver as well. Hence the fact that we saw it up here. Then since the COVID, so if you look 5 years back, you see that North Carolina continues to be in the top 4, top 5 of highest gain payroll employment. This is the chart that I'm the most. Of course, this is important because we need new jobs. We need more salary for people to buy houses. But this is the next few slides are what I look at every time, and it's going to be boring. So if this is 2005, 2006, 2007, 2008, 2009, I have been saying this since 2024. If we call the 2008 real estate market and a real estate crash, and we're selling less homes right now than 2008, at what point, and I'm still waiting for the news, at what point are we telling the people that we are currently in a real estate crash? The only reason nobody is saying that this is a real estate crash is that we do see that home price or
Okay, now your voice is cutting out.
Oh, there you go. Can you hear me again?
Yeah.
I don't know what's going on. I need to look into this after this meeting, but my apologies. Thanks for letting me know. So what I was saying, in 2008, we called a crash. Now we don't. The only reason is that in 2008, we saw inventory spike super high and there were no buyers. Inventory, as you can see in a later slide, is still going down, despite the fact that we have 635,000 more sellers than buyers. Existing home sales, as you can see, 2010, January of 2010 was the only time it was lower, and maybe at some point in 2008. But for the last few years, we have been hovering about the lowest transactions ever recorded since the recording. This is inventory. Inventory keeps going down. People are just, and the reason is that people are just, instead of putting their home in the market, they don't get a price. They just pull it off, and they continue to live there. Medium home price is steady, but delinquent mortgages, yes, foreclosures are going up. But guys, we gotta continue to look at 2019 and 2018 at the true real years before COVID, and we continue to be under that level. So foreclosures do not, and anybody I follow agrees with me. Foreclosures are not on my radar as being something that I need to be worried about. And here you see the mortgage applications. It's just incredibly low. All right. Look at oil prices. So we were at $87 on, let me do 5 days. We were on $87 or $89 on Friday. No, this is June 1st. Here we are, $86 on Friday. Now we jumped up to $93 and $92. And you see that mortgage rates keep following that. Unemployment stays pretty steady, 4.3. Nothing to worry about. A little higher than last year, but nothing to worry about. Here, this is the net migration. Why is net migration important? If you are an investor, you only want to invest. If you're a short-term investor, what I mean with that is a buy and hold investor does not, of course they do, but does not care as much about the net migration as a builder or a flipper like I am, right? Because as a buy and hold investor, of course you need people to move there, you need people to live there, but your span, the time that you take over your investment is much longer, right? A builder like me or a flipper, we need 6 months to 1 year to turn our product. So what we're looking at is the net migration. Where are people moving to? And I don't know if you guys saw this article on my Facebook page. If you don't follow me, I recommend you go there. I post a lot of content there about data, about real estate. But Zebulon and Wendell were one of the, and Nightdale for that matter, were one of the fastest growing cities in the entire nation. And you see that back here in the net migration. The net migration is high. And then you go over here. Yeah, I've tried to zoom in on this. If there are smarter people out there than I, then let me know. The net migration in Durham is at least 2% lower than in the Johnson County area. And then you go into Wake County. Wake County is at 2.3%. And so if you, like me, have property in Durham and you're trying to sell it now, you most likely are struggling to sell that. Net migration, some other factors as well, such as the sewer hookup in Durham. And I can dive into that if you want to. But the sewer in East Durham is also a major issue for the real estate market. Pending home sales, although that we saw an uptick of 1.4%, the South, I'm feeling this. The South is losing month over month sales, so we see actually a decline in sales in the South. I put that all in a brief slide deck, and I did that with AI. So I want to show you real quick what that looks like. Where are people coming from? So the reason I want to know where people are coming from is I need to tell my realtors where to promote the properties. Marianne, I know you're going to ask me a question about Airbnb. My Airbnb, I look at data. Where are people coming from, making a reservation to come at my Airbnb? And then I spend my Facebook ads, I spend my efforts targeting the areas where most of my people are making reservations for. Same with realtors. We want to know where are people moving from, right? Because if you have a product, that is over $1 million, like I have, or is just higher for that region, you want to know where are your people moving from, so that you don't. Of course, you have it on Zillow and on the MLS here in the local area, but you also want to make sure that your realtor or your team or whoever makes ads in the region people are moving from. So here are the people. Most people are moving from New York, from all of it. Where are the hot markets? Mordecai, North Hills, Bayou Creek, Nightdale. Told you, Nightdale made national news from the data. Old North Durham. Durham can be very great, similar to Raleigh. Durham and Raleigh are great if you're focusing on the right neighborhoods. Walkability. West Durham, high-end Durham is still doing great. So, and then the last slide. Hot neighborhoods are still on 10 days on the market. Strong employer base. Apple, Google, biotech. Guys, the forecast, what is coming to Raleigh, right? They broke ground. You heard it here on this Q&A first. I told you about Raleigh South. They are tearing down trees right now, and Raleigh South is happening. I know I have a few newbies on here, and I know I have a lot of people that are returning, so they're getting sick and tired of my Raleigh South news. But let me pull up a quick Google Maps, and I'll tell you where Raleigh South is. So if you have Raleigh, see, I always keep telling people that Fuquay is the center of the universe, and I open my map and we're at Fuquay. Anyway, Raleigh South. This is Raleigh, right? You see Raleigh here? This is 401. This is 440. For those that are familiar with this area, here's the Sam's Club. Raleigh South is happening right here. Can I? No, I can't. But it's happening, I can't, right in this area. They're already starting to tear down trees. They're already going to build condos. Condos first, some commercial on the bottom. But the goal is to build here an MLS stadium. There is a soccer club in Cary that wants to get MLS permits or higher permits, the higher league in soccer. And the Hurricane owner, who is very successful, as we know, with the Hurricanes. We're going to the Stanley Cup tomorrow night. It's looking to build a stadium here. It's major news. This whole area is going to be larger than North Hills. So you thought that North Hills is a very attractive area. Think again about Raleigh South. So that's why I am personally, although the data is not supporting it yet, I am very bullish on Raleigh, more so than Durham, because there's more growth happening at the moment. So with that, I will stop. This was my intel about the real estate market. I do think that oil prices will still come down. I am still thinking that we're going to get a good summer with sales. We do need to see oil prices to come down. I still think it's going to happen for July. I don't have other data other than saying, Iran is running out of storage, and oil, you cannot just turn off an oil tap. You can just not, if you drilled for oil, you can just not say, okay, I'm going to turn it off now. There's pressure. If you don't harvest it, then you get water in your oil. You can't store it anymore, and then you just lose the oil, and that's income for Iran. America, we have midterm elections coming up, so that's that is a very important thing for our president. All right, let's go into the Q&A. If you have a Q&A, put them in the chat box below. You can come off of mute if you have a questions about your question I'm going to ask. Marianne says, what are the pros and cons of a midterm rental, and where do you think the market are best for them? Pros are, so I have an Airbnb. I have it at the beach. What you always want to do is before you do an Airbnb, you want to make sure that you read the rules and regulations about where you're going to invest. My personal advice is always invest in areas where there's not a lot of hotels. I'm in Topsail Beach. Topsail Beach has hardly any hotels. Has a few motels, but has hardly any hotels, especially where I am on the south. Why is that important? You see that the places where there are restrictions on Airbnb are either really high-end neighborhoods or really high-end cities, or are cities where there's a lot of hotels and the hotel lobby has more money than the Airbnb. Airbnb doesn't care. They just want your money, right? And the hotel lobbies will lobby there against Airbnb. So I would do your research, and it needs to be a high destination area.
Well, this is for midterm though, so we're looking at.
Oh, midterm. Oh, sorry.
Yeah.
Oh, sorry. Okay. Midterm. Then you go to Furnish Finder.
Yeah.
Furnish Finder. So midterm. Sorry, I read that wrong. Furnish Finder is for nurses or for people that are traveling for their work. And then you can find data there where are people moving to, which hospital, where are they migrating to, where are they looking for a furnished area or furnished house. Furnish Finder is what I've used in it before.
Okay. But were there, can you think of any particular pros and cons? Have you done a midterm before?
I've done some. I've done it with my Airbnb. I've tried to do it in a Greenville. The pro is that you get higher rents. The pro is that you have often somebody that is in your house that gets the rent paid by the hospital. So they get a salary and they get an expense budget, or by their employer. You often can get high-end people. I mean, what I'm thinking about is C-suite type of people. And
yeah,
the wear and tear on your house is larger, and therefore when they do turn over, it's not like an Airbnb where there's people stay for a week, and of course there can be damage to it, but the wear and tear on the wear and tear on my Airbnb, if I have people for longer than a month, is greater than when I just have people for a week.
Oh,
So
that
that's
is
one of the
good, that. Okay.
that's one
Eric,
of the
just to be
cons.
clear, what is the midterm? 3 to 6 months kind of things?
I
Midterm,
think 3 months or more.
yeah. Midterm is somebody that is still looking to move to an area, but not like a rent, like a tenant, like a regular tenant. They're still looking for a house that is fully furnished, that has all the bells and whistles. They can just move in and, like a travel nurse, or a C-suite executive that is having to travel for a while. So that is a midterm.
It will depend on the contract that nurse or whoever traveling, the period of that contract. So it could be from 3 to 6 months.
I could barely hear that.
It depends on she said it depends on the contract of what that person has, but yeah, but the pros are they have a budget. The cons are the wear and tear can be greater, and you're doing some more repairs, and you still have to stage it. You still have to put furniture in there, TV is in there and stuff like that. But you get higher rates. Now the gap between one person might be between the turnover, right? Like one person leaves and you're looking for another one. There might be a little bit of a gap there, but the rate can be higher on a nightly or monthly basis.
Okay. Thank you.
Yeah, and enough. You raise your hand.
Yeah, sorry. I had to drop, but I jumped back in. Were you talking about your beach Airbnb right now?
Also, yeah, I misunderstood, Marianne. Yes, I did.
Okay, so you were referring to the beach Airbnb or rental. I was curious whether overall, you mentioned the location that you're at the beach, whether year over year you've been positive on renting that out.
I have been staying not positive. I'm staying right at the same level recently, but I also
Okay, so break even, right? Break even.
For me it's a break even. So if you do an Airbnb, what my advice is for an Airbnb is you need to be able to afford it. Don't do an Airbnb if you're thinking that you're going to generate income. And you can still generate income, but it's a little bit harder, right? Like if the Airbnb market, particularly in some areas, is oversaturated because everybody wanted to do it, and everybody was like, "Oh, I have a free house." I barely break even with my mortgage now. The reason my return on my investment year over year is the same is because I raised my prices because I wanted to be the cheapest. But actually, data shows, which I posted on my Facebook, is that the high-end Airbnb was doing way better than the lower-end Airbnb. And the higher-end, large luxury homes was thriving. So I inflated my prices by 10% just to look more on the higher end than targeting the lower end. And I also listed my property with my church, not for a profit. People in my church booked my Airbnb for what I'm in it for per night. So instead of paying $3,600 a week, people pay $1,800 a week. So I increased my prices, and then I just went a little bit of a different route because I personally are getting sick and tired of people complaining about the most little things that there are, and I'm like, dude, like, are we serious right now? So yeah.
Okay.
But again, make sure.
Just curious, that beach location. How long have you owned it for? How many years?
4 or 5 years.
Okay, because sometimes you make the money on the appreciation, especially at the beach.
Oh, I definitely make it on the appreciation. I bought it for $550. I bought it for I bought it for $550.
Yeah.
Fixed it up and it appraised for 7 something.
Okay, that's
I'm not worried. No, it's for the kids. It's for later on. Brett is asking Pinehurst and Southern Pines Market. Hi, Brett. Here we go.
Thank you.
We're gonna do what we always do. It's not a market that I invest in. I hear good things about it. And a friend of mine, he's an investor, and he lends on new builds in the Pinehurst area for people that are building high-end properties there. And he's saying that he's just swimming in money right now because he got cashed out on so many new builds. Pinehurst data. So here's what I do. And again, if you've been following me for a long time, this is how I look at data, right? Like you can go to Redfin, you can go realtor.com, or you can go to Redfin, and what you get is you get these stats. So what you're looking at is, I don't care about the median sales price. Why do I not care? Is because that doesn't, it's for the entire area. It doesn't focus on one particular neighborhood. Now, you can say the same thing for home sold. You can say the same thing for days on market, but it gives me a general idea of where the market is going. And as you can see, since 2024, although it is slow, but the market continues to trend upwards, right? Yes, there are dips in there, like here, but the overall number, what I mean with that is, this is the lowest dip and is higher than the lowest dip in 2024. This is the lowest dip and it's higher than the lowest dip in 24. That's what I'm looking at. Here's and people hate me because I keep telling people not to invest in this market. There's a lot of people that make good money in Fayetteville. But if you're looking at the overall home sold, first of all, it's negative year over year. Not a good sign. But the lowest dip in 24 got lower in 25, and it's similar as in 2026. So you see that the tendency is kind of the opposite direction, right? So based on what I just showed you, I don't know what particular your question is, but if you buy right in the right neighborhood, you should be doing well in Pinehurst because the year over year sales are up and the year over year days on market are also up, but that is everywhere else in the nation. But year over year sales are up.
That's also
Did
dominant.
did that answer your question, Brett?
It did, yes. Thank you.
Awesome. Sorry, Maya, you're really hard to hear. By the way, I don't know where
Can you hear me now?
I don't know where your microphone is, but it just sounds, you sound far away.
I'm literally in front of the TV, but a lot of military too, they're moving out of Fayetteville to Pinehurst, that's why it raised the prices. And we're talking opposite, they just can't afford the high end with the golfing stage. So it's like a whole lifestyle here. So Pinehurst is down the street, so that's why you see Fayetteville down and Pinehurst picking up.
Yep. Well, thanks for that insight, Maya. I have a small parcel. Neil is saying, I have a small parcel in Chapel Hill. I'm planning on building a duplex on it, but someone suggested me to look in splitting it into 2 lots, building 2 single-family homes on it, and doing that I would lose 16 feet due to setbacks. That was going to be my first thing, like, hey, what's your setbacks? And I would only be able to build a 20 feet wide home. I feel like it's too small, and I am thinking to stick to a duplex route. I would lose some time subdividing it. Yes. So Neil, you're check. If you're subdividing a lot, I'm not familiar in Durham or in Chapel Hill. I speak from experience in Raleigh and in Durham. And the reason I say that is every city is different. But in Durham, it took me over a year. In Raleigh, it took me over a year. If you subdivide a lot, it's a long process. Now, what you want to consider, and I don't know how to show you this, but what you want to consider is, don't do a duplex front to back. And I haven't seen a lot, so I don't know what is in the back, and I'm not sure if this is doable. But if you have a duplex and you have 2 lots, these are your 2 lots, make the garages front to back, but then the top units, then they turn into front and back. So you put the stairs in the middle. It's a concept they're doing a lot in Cary. And one of the issues I see in downtown Raleigh is, in downtown Raleigh, you have a lot of small lots, like you're referring to, Neil. You have a very small lots, you have very skinny townhomes, and they're front to back, and they're all the same. So now you have a skinny home, and you have neighbors on both sides. If you make the garages just on the bottom, facing streetwards, but on top, you're going front to back, one unit in the back, one unit in the front, you have a super wide unit, and you only have a neighbor on one side, and the staircase is in the middle anyway. You see that module a lot in rent to own communities. You see it a lot happening in Cary right now. And if I was to build another duplex, that's the route I'm going to go, because I want to be different. I want to stand out with my product, right? Like what you see right now in Raleigh. I'm talking about Raleigh. I'm not sure if it's in Chapel Hill, but across the Raleigh area, what you see is that if people can afford a home with no neighbors or wall to wall, they will do it. 2, B, people will steer away from properties with an HOA. Properties are already very unaffordable, and then you slap onto that another $200 in HOA fees, and you make the property even more unaffordable. So be creative, think of other ideas, and connect with me afterwards if you want to have the ideas. But yeah, I would go garage side by side, and then the top units are front to back. I like the concept a lot. It's not my idea. I stole it from somebody, but it's one that I think is great. Brett is asking, where can I ask the slides? If you email me on this email address, I can get you the slides. It's down in the chat. PK, how do you play the Raleigh South? Will it work for a flip? No, Raleigh South does not work for a flip. Yeah, I mean, sorry to be so straight. It will work for a flip if you buy it right, of course. But if you buy high, Raleigh South for me, right? Raleigh South for me is buy and hold. Raleigh South, until we see some really activity there, until people can see what is really coming to Raleigh South. Raleigh South adds already value to the market now, but is not adding the value yet to the market. People need to see it. I struggle with selling some of my new builds, and the only reason I'm struggling is they're not 100% finished yet. There's little details, such as I'm still doing the design of the yard. There's a teeny the painter still needs to do a touch-up paint. The floor needs to be restained one final time. Buyers with an inventory that it is in today's market, buyers want a ready product. They want to walk in, they want to drop their bags and be ready, right? Why do I mention that is if buyers can see a product that's almost finished, they cannot see how great. And I mean, if you look at the renderings of Raleigh South is going to be fantastic. There's going to be underground cabs. They're looking to connect Raleigh South with downtown Raleigh, with the convention center, by potentially underground cabs, and then they're going to connect it to Dixie Park as well. So that's going to be a triangle that they're looking to connect. They're looking at all kinds of ways to connect that, right? The trolleys and buses, underground cabs. So Raleigh is going to be Raleigh in the next 4 years is going to explode. So Raleigh South to me right now, if you buy it 70 cents on the dollar, it's a good buy and hold. Otherwise, you can do a flip, but you're going to get a better turnout in a few more years. Melissa is asking, hey, what do you think about model homes leasebacks with a minimum of 18 months hold? What do you think of a model home leaseback with a So is the builder wanting to lease this back from you, Melissa?
Yeah, exactly. So basically it's a home that you would purchase now, but they would essentially rent it from you for 18-month minimum, and they're offering to pay a above market rent for it. And I
Yeah.
know I know people do this. It works numbers wise, but I'm not sure why and if it's a good investment.
Marianne, can you come off of mute, because we have discussed this over the last 3 months,
Oh, you
and
have? Okay.
no, and this is not a dig on you, Melissa, by no means.
Okay.
I'm just
I
asking
haven't been
Marianne,
here in
who
a
looked
while.
into this. Yeah, no. So there is something going on, Melissa. That there is something going on that everybody's asking me for this.
Oh,
That's
okay.
and B, it's still something that is available, right? So, and Marianne, and the reason I asked Marianne to come off of mute is because we discussed this in great depth last time, and there was somebody that looked into this and almost signed a contract, and then there were some nuances that you need to understand. So I'll let Marianne explain that.
Well, it may be that the reason people are talking about it is because Brenda Schriegel is doing it. And I think she's doing it with Lisa Coleman. I think
Lisa Coleman. Okay, yeah. Yeah.
And for them, it seems to be a great deal. I think it depends on the deal that you get and the builder that you work with, because they're using private lenders for the down payment, and they're starting out with cash flow. What I got from our last meeting when we talked about this was one of the supposed cons is that when if you try to sell it, you're competing with a builder who has incentives. However, by then those builders will be done. They're no longer offering incentives. They're keeping it until they're done building. So then they're not offering incentives anymore. I don't really think that you have competition there. When I looked into it, I looked into one possibility, and I talked to like 3 different builders. And what I found is that even though they were paying above market rent, it still didn't meet the 1% rule. But I have a JV partner. We're still looking into it, considering it. I also thought that you have to keep a DSCR loan for 5 years, but apparently you can because then you can't really sell it right away. You have to rent it out. And what if it doesn't rent well? However, apparently you can get DSCR loans for less, or you can have no penalty. What do you call it? Termination, buyout, however, you can pay it off. So we're still looking at it. I see some pros and cons. It also depends on whether you buy a townhome, because I spoke with someone about, do you get a townhome with an HOA? Everything is taken care of. And the drawback for that is that renters don't stay as long in townhomes, because they're only going to lease it back for so long. And then what do? That's the thing. Now you've purchased this product. It has all the bells and whistles. Ordinarily, you wouldn't do that with a rental property. So maybe the better idea is to not make it a lease back and just buy one of the lower end properties and rent it out outright. Because you get a good deal from the lender, but from the builder, but for how long? A year and a half, 2 years is not very long.
No. So I guess, Melissa, it's all in the numbers, right? Like again, with every deal. I have never looked into it. My thing would be like, why would a builder pay above market rent if they just go outside the neighborhood and pay market rent? Their cost is lower, right? I would look at, and there's absolutely some language in there, but I would look at the wear and tear. Are they responsible for the wear and tear? Are you going to get it back as a new unit, right? Are they responsible for the repairs, or like what are the nuances in the contract? Because if they're responsible for all the repairs and they give it to you back with no wear and tear, and they whatever, right? Then it might be worth it. But if you're having to hold it for 2 years, and then you're having to do all the repairs and so on.
Oh no, it's a model home. They're going to keep it in tip-top shape, and that's why you get all the bells and whistles. So there really is no significant wear and tear, and they are responsible for that because they want to keep that in the best possible condition. The builder that I spoke with, they just want you to pay the mortgage, principal, interest, insurance, an HOA,
Mm-hmm.
and they pay for the maintenance and everything. They pay for the utilities, just like a renter.
So what is the monthly payment and what is the cash flow?
On,
Well, I
on
don't-
this,
Oh, yeah, go ahead.
oh, sorry. I was gonna say on this one, it looks like all in it's gonna be about $4,000, maybe a little bit more, and then they're willing to pay 4,800 for it every month. So I was like, that doesn't seem bad, but then that's really not market rate. Market rate is probably about $3,000 if you really make that a rental. So your only exit is to sell it or
Sell
live
it.
in it.
Yeah.
Yeah,
Yeah.
and then you're banking on that equity, right? That it appreciated over the 2 months or 2 years, sorry, that you had it.
Now I'm a
Melissa.
builder, right? So I understand that cash is king,
Hmm.
but why would you, if they're paying less than $4,000 right now to their lender, but yet they're willing to pay you, you get a higher loan than they have, and yet they want you to, and they want to pay you more. There is something about that, same as if somebody, a realtor, a wholesaler, or if somebody sends me a deal, right? And it's a lot in a neighborhood that is mostly developed, but
Hmm.
this is one of the lots that is not developed. That builder that was building all around that lot knows something about that lot that I don't know. So it's, as investors, we are value add, meaning we buy low and we sell high, and the difference is ours, right?
Hmm. Hmm.
Either in equity, you either make money in equity, you either make money in cash flow. So why would a builder that has a lower loan on it, because they're not paying $4,000, they get an incentive of selling it to you by the lender, right? The lender will say, oh, here, I closed on another loan, here you go, from a bone. Why would they pay, to your point, $1,000 per month extra for a show home where their payment was already less? There is something, and I can't put my finger on it. I would tell you, like anybody else on this call, if you pick up a deal right now, this is I keep saying this is the best time of buying a home. There's nobody buying, so you can negotiate deals. If you thought that COVID was a great time, no, there's no millionaires are made in a downturn market, not in the upturn market, because you buy low, you sell high, right? That's when the millionaires make. So be careful. Just understand the nuances in that contract, and throw it in ChatGPT, throw it in Cloud AI, however, wherever you do it. But there is something that we are not thinking about that you need to take into consideration. One of the things is what you already mentioned. You have a $4,000 payment. There, 4,800. What happens after 2 years?
Right.
Well, Eric, my understanding is that they just want to cash it out, kind of like some businesses operate in a property, but they if they own the property, sometimes they sell it so they can get the cash for operations. So now they're renting the land, the building, not just builders, but like other businesses. I forget the word for it, but they don't want to own the property because they need the cash. So I guess that
Yeah,
one
but they're still
would
losing.
imply that they
They're still
didn't
losing
borrow
the
the
money.
money.
They're still
Even if
losing
I-
the money. They're paying $24,000 extra in rent over 2 years.
Eric, this is Basit here.
If the market is 34 or 38 and they're paying 48, they're losing $24,000 over 2 years.
I think maybe they're getting the cash, like you're buying the house from them, so they're getting the cash.
How much is the cash, Melissa? We'll move on to
Second?
another
It's like
topic.
620.
Okay, so they really sell it to you for $599 because they're losing $24,000 over the years. 620. What are the other houses selling for?
650. That's what they said. I need to pull my own comps, but
Yeah,
that's
please.
what they
Yeah.
said. And I mean,
Yeah.
it's 110 units. I think they've sold 14. It's been open for about a month, they said. So I don't know what's going to happen with the place, anything could happen, but on paper, it seemed like a good idea. I just couldn't figure out why, because it seemed too easy.
Yeah.
It's usually also on an ideal lot. Like I was looking at a townhome, it was the end unit.
So that's always appraised lower because the end unit is often on a busy road. So you're already losing 10% there. Melissa, you said the key, you said the key thing. I need to run my own comps. Yeah,
Yes.
you do, because if it was up to me and I ran my own comps, I would have sold this at $600 a square feet. But I don't know why people are not buying it yet. Right? We are at $575 a square feet.
Mm.
Do your own comps. Do your own DD. And by the way, nasty plug, guys. June 13th. Somebody asked me about it already. Bippin is asking me, are we going to a duplex? No, we don't. Yeah, we go to a duplex, Bippin, but I'm not building the side by side and then the top is back to front. We will tour this house. The house is done. We will tour this house on June 13th. And we're going to go to a few more in we're going to go to a few more in Raleigh. Let me see another one that we're going to. But June 13th, 9 o'clock in Raleigh, 9 a.m. We're going to tour 5 houses. So, Melissa, good luck.
Thank you. Thanks for the help.
Yeah, I would just look at the numbers, do your pros and cons. Sounds like you know what you're doing. But if you have any further questions, my email is in the chat.
Okay, appreciate it. Thanks.
Absolutely.
Thanks,
Thank
Marianne.
you. Daniel Gross is on it. Good to see his name here. Eric, we have here a PA for the military. He's in Pennsylvania, so his own business there. Any questions? We can evaluate the deal. It's 8 o'clock as well. We can also say good night. The hurricane.
I have a question. I don't want you to say good night yet.
Oh.
All right. So my question is, so I am actually rehabbing a house, and I wanted to ask you if it's a good idea to install all new appliances before I sell the house, or give that $5,000, $6,000 in closing costs so they can select their own appliances. Any thoughts there?
Yeah. So if you flip a house, the biggest ROI, I'm going to ask you a question, but I'll do it the long way because Tria is paying me by the minute. No, I'm just kidding. Long answer is your biggest ROI is on your garage door. Search it, Google it. The biggest ROI is on the garage door. If you do a flip, change your garage door. Biggest ROI. Just look it up. Yes, you do put appliances in there, and you put a little bit higher appliances in there than the area would support. You spend maybe a few $100 to $1,000 extra, but it will appeal to a buyer. In this market, during COVID, I didn't, but in this market, I put dishwasher, stove, and refrigerator in the house. Even a wine cooler if I can, or at a wine bar. So what I do in some homes, I put a washer and dryer in there. Again, it's that move in ready. You want to stand out from your neighbors. You want to stand out in that market. You want to say that you want to be the reason that people say, I am choosing between A and B, but Finite has a washer and a dryer, which costs you $600-$700. Finite has a fridge in there. Finite doesn't have Samsung, but he went for Frigidaire, or he went from some other brand, right? Just put something in there to convince it. Yes, you spend a little bit more. Just put it in your budget. You'll see your holding costs are much higher than what you're spending extra on appliances.
Okay, no, that makes sense. I was just trying to debate because then people can choose. But then when you do pictures, you will be seeing some gaps, appliances missing. Then first impression may not be the best impression. So I think you're right.
People don't want to choose anymore. They want you to choose for them. They want to walk in. They want to drop their bags. They want to be ready. They don't want to pick up a hammer. They want you to choose for them and say, this is the best that there was. And just, they want to put their head on the pillow and go to bed.
I love that.
People are too busy these days, right? We are too connected. There's so much going on in our world that we need other people to pick it for us.
Makes sense.
Enough
Thank
is
you.
another.
Yeah.
Yeah, anytime. Enough. Go ahead.
Yeah. So along those lines, have you ever done a pre-sale on a new construction? You're saying, like develop it, put the appliances, all of this, build it, and have it ready to move in. But have you ever done a pre-sale successfully where you've designed it, cleared the lot, have it construction ready, listed it, and then it's sold, right? And then the buyer is doing all the selection process there.
So this is the first one I did. I was going to, and the pictures are gone, but I bought this house. I bought this house for in the 500. Let me go. I had beautiful drawings, whole new build on here. 6 works. So this is the same house. There's a different, I guess, different listing. So I bought this one for 5 something. Let me go to one of my active listings. So the buyer on this particular deal did not want to execute the drawings I had. They didn't want to go and work with my architect. They wanted to do their own things, but we did sell them all the plans, and we did sell them like, hey, this is what you can do. Here's another one. So this currently, let me go here. So this is currently what is there.
Uh-huh.
We own these 2 lots. I did a
Okay.
JV with somebody. He owns this one, and my name is on the loan, so he got a bit better deal. And I own this one.
Okay.
But we're selling it like this. This is a 3D rendering.
Uh-huh.
So this is what we are going to build there. People can buy the plans. Yes, I'm selling it for 200,000 more per lot than I bought it. But I also spent the art, so people can literally buy. Hey, here's the architect, here's the surveyor, here's the builder. Go ahead and pay this for it, right?
But you'll knock the old house down and have it construction. No,
at 750 at 755, I do nothing. You can get my plans now. If you pay me $2.2 million, I'll build the whole thing for you. Here's another property. And
but then how do you list it? Do you list it as the old home, or do you list it with the new plans?
So it was listed with the new plans. I don't know if you saw, but let me. Yeah, hold on. I don't know why. Going to show you another one in Boland Heights. Boland Heights is a very well-known neighborhood in Raleigh. Maybe I just need to go to a different website. There you go. X out on this. We'll go to 404 in. Let's see. Right now, this is 3D renderings. So we go to 404 Kinsey. This is the house right now. If you walk in it, when we bought it, we had garbage bags of cat poop, cat litter sitting in the garage, in the hallway. It had been sitting there so long, it was hard as a rock. The way we're selling it is for $1.8 million. This will be the entire house on the back. These are 3D renderings. None of this is real. This is a 3D rendering. None of this is there yet. But you can buy right now. This is a 3D rendering of how the yard is going to look like. Right? This is the architect drawing that we have drawn up. We have gone through the entire process, worked with the historic district of Raleigh, and get these plans. People are interested in this deal. People are interested in the Van Dijk deal. So yes, to your point, Nana, there is a market for this.
Yeah.
And yeah, you can do that.
Why not just go in and knock it down? Like you're going to pay 20,000,
Oh, you don't.
25,000,
You don't.
knock it down.
You don't. No.
No?
This is historic district of Raleigh.
Oh, this is not a tear down. Okay, my bad.
If you tear this now,
Oh yeah,
now
okay.
hold on. I'm going to stop presenting.
I thought it was a tear down. My bad. My mistake.
If you guys, how dare you think that?
Sorry.
You guys want to see what the Raleigh
Go to jail. Go directly to jail.
Yeah, no. If I would have teared that down, it took me a year to get. No, that's a lie. It took me 9 months to get permits because the city in a historic district wants to know what is your paint color, what is the brick, what is the wood you're using, what are your finishes. You need to have everything. I'm going to show you 2638 Davis. I'm going to take you there on the tour on June 13th. Here is the funny part. This is what Raleigh considers a flip. Again, this is in the historic district of Raleigh. We are not able to tear the house down. We can only do a flip. This is how I bought the house, right there. This is how I bought the house inside. This is the yard, right? Here you see everything. Here are the windows that I got from the buyer. And this is the house currently. Raleigh calls this a flip. I need to leave one wall up. One wall. As long as I leave one wall up, I am doing a flip.
Hmm.
And you know how long it took me to get permits on this one?
How long?
I own it a year. And we're just starting.
Okay.
City of Raleigh was challenging me because we wanted to build too big of a house. That's where the history is. Sold September. I own a year in September.
No.
I bought it for $620. I think we're spending $700. We're spending $720, and the ARV on it is 2.2 million.
Okay.
Do you think I worry about holding it for a year? That's why when you do new builds, guys, I always say if you do not make at least $100,000 when you run your numbers, don't even do a new build. I know there's builders out there that do very low entry homes. You know, they build them cheap, they build them quick, and they make $30,000, $40,000. At your first build, do not do a new build if you don't make six figures or at least something like that. Guys, there's so much things that can go wrong. I want to protect you. That's my job on this call, to help you understand the mistakes I make so you don't do them. Have a large margin, because if you have a small margin, then go be a flipper and just flip a property here and there, right? So, all right, other questions?
I put one in the chat about the garage door.
Oh, what do you put in the, oh yeah, sorry, I got two more messages. About the garage door, should it be done in a modern garage door? Just drive the neighborhood.
Just what?
Drive the neighborhood.
And
Go
see
in.
what the other neighbors have? So if it matches the neighbors, then it's not a big deal. You don't really need to replace it.
No, yes and no. An older garage door will make more noise. An older garage door always has a few dents in there and insulation. People like the new engines, the new garage motor, the Wi-Fi capability, the cameras that come on in on them. For some reason, garage doors, and Google it, have the biggest ROI. You can do a different garage door than a neighborhood. What I mean with do the same thing is do the same design. And I'm pulling up a picture right now. So here are the new builds that I'm doing in Bickett that we're going to see in June. And the builder asked me, what are you doing for a garage door? So I just drove the entire neighborhood and I saw garage doors that have had some windows in the top. So I went to my garage door, and of course I don't have a picture of the garage doors. Oh, classic. So I just drove the neighborhood. Maybe I can pull it up here. And everybody, or the most modern houses in the neighborhood, they had a garage door. No, also not there. Anyway, good story. Now, so they had garage doors with windows in the top, and I picked a modern looking garage door with windows in the top. So the general design was the same. We were debating if, hey, should we do an all glass garage door that has matte glass that you know you can see that it's glass, but you can't see through it. We went for the same design, or same, but the modern style, if that makes sense.
Yeah, some HOAs won't allow you. Like we have an HOA, and our garage door's a little dented. If we sell, I've been thinking that even though it's not a big dent, we probably need to replace the garage door. But I hadn't thought about all the, what do you call it? Like the automation of it, because it's reasonably quiet. I don't know that people would care in our neighborhood.
But you're also tailoring it to the younger people, eh?
Yeah.
Neil is asking, is it worth buying on New Bern Avenue? I know this lot. Is it a corner lot, Neil?
Yes, it is.
Yeah, I looked at the deal. Now, what is going to happen? Let me tell you what's happening in Raleigh. And he already knows. He's a very educated guy. So the transit over district. Oh, what is the acronym for it? T. Anyway, it stands for Raleigh has an shorter version for it. Anyway, this is New Bern Avenue. If you're driving on New Bern Avenue, let me do a pin. Let me see if you can see it. No, you can't. Okay. If you're driving on New Bern Avenue, there's construction going on. What is going on New Bern Avenue? The frequent transit transit area Raleigh. We're just gonna pull it up. This is things that you guys need to know. So this is important. Oh yeah, here you go. Frequent transit. This has been approved in 2019. It's going to be completed in 2030. What am I trying to show you? Raleigh and surrounding areas are going to create separate bus lines, roads, just for buses that are connecting Mooresville, Cary, Durham, Nightdale, and all these surrounding areas with Raleigh. So what is going to happen at New Bern Avenue? I guess I got out of my map. Where's my map? No, here's the map. So New Bern Avenue, right now, Moore Square, right now, the bus stop is right here. The bus station is right here. That is going to change. And the bus stop is going to be, you looked at somewhere this property. Where's the shell? Where is the shell? So here is the hospital. The new bus station is going to be somewhere in this area. So is investing in New Bern Avenue interesting? Yes, it is. Neil, when I looked at that deal, and I was looking at it like, hey, I buy it now, and then later on, I would sell it, I would entitle it, and I would make a 5-story, some type of unit. The profit on it for me was not more than, when I ran the numbers, was no more than 300,000. So I said no to it.
Okay, so you probably saw the same one that I'm talking about.
It's a corner lot. It's a house.
Yep.
They begged me to make an offer on it. I'm going to tell you the address right now. Do you mind if I tell the address?
Yeah, I don't care.
Okay. $1901.
Yep.
1901 New Bern. Here, this is the play that we were, or I don't know if this presented with it. This is the play that we had in mind of doing. So we would zone it for something like this, right? And a multi-story building with condos in it. We ran the numbers. This is the zoning here. This is the area. We ran the numbers, and again, it was a $300,000 play. Now that's fine, but the transit overlay district is not done until 2030. So we had to hold it for 4 years, turn it into a rental, fix it up. We didn't see the numbers work for us.
Okay,
Good question, though.
thanks.
Yep. Any other questions?
Hi, Rick.
Hey, so there.
Yeah, just a few minutes ago, you said that you made some mistakes.
Yeah.
And you don't want us to repeat. So could you please share 2 or 3 of those? There are really major mistakes that you want us to avoid, please.
So the major mistake, one of the major mistakes, and I think good question. So let me pull this up. Let me find the address, because this is why I tell you to just not trying to change the entire neighborhood, just drive the neighborhood. So this is a deal. This house here, I lost $19,000 on this house. I personally think I picked nice colors. The reason I painted the brick is in this area there was foundation issues, so we took out the foundation and we rebuilt this whole wall to make sure that the buyer had no foundation issues. So you could see the difference in the brick. And these at that point were hot colors. In any neighborhood, you saw this color scheme. Well, look at the rest of the neighborhood. It's all white and maybe a yellow here and there. So I was standing out in a negative way. I would try to change the neighborhood, not looking at what would go into in this neighborhood. So that's why when Marianne asked me about the garage door, just look at the neighborhood. What is the general design, and make it a little bit modern or make it newer. One. Second, make sure that when you pull your architect plans, that you know what the size of the house you're building. I'm getting a lot of showings on this house. I can pull it up here. I was going to build a 2,000 square foot home, but then we ended up with 1,700 square feet. So all the feedback that I'm getting on this house is fantastically done, high-end quality, living area too small. I picked the wrong plans in the wrong neighborhood. So make sure that when you do look at plans, let me show you where you find this on every SPR. SPR stands for the approved permit plans. On any plans that you have, you have always on the first page. If it's not on the first page, it's definitely on the second page. You see the total square footage. Over here, it's here in the top corner, 1,650. When I ran my numbers, when I got a loan, I ran it for 2,000 square feet. And at 2,000 square feet, I could sell this house at $699. So I bought it I made 300 square feet too less. Second mistake I made is I'm too optimistic over the length of the time it takes to build. On these properties on Biggett Street, because I had to fight with the city, August of this year will be marking 2 years that I own the properties. Now, luckily, my profit on these was and is still a really good amount, and that's why I tell you, don't do a deal without $100,000. I'm still going to make money on these on this project. But the project is dragging on way longer. A project will always take longer. A project will always cost you more, and you always will run into issues that you didn't foresee. So that's why you need to have a good enough buffer on your deals to make sure that you can hold it and still turn a profit on it. So those I would say are my major mistakes that I made in the last year. And then also is I continue to buy in neighborhoods that were not selling anymore. So look at your data. Just look at the data. What I always say, if a property is easy to buy, it's going to be hard to sell. If it's hard to buy, it's going to be easy to sell. Meaning, if you have competition while you're buying that property as an investment property, it's going to be easy to sell that property. If you're having no competition on, I can sell you properties in Rocky Mount. Nobody will ever look at it. But then when you fix it up and you want to sell it, you might not be able to sell it, right? So look at. That's why in the beginning of the call I always start with data. Look at properties in Nightdale, Wendell, Zebulon, downtown Raleigh. Look at the high-end market in Durham, right? Look at areas where properties are still turning, where people are still buying, because in those areas you want to buy right now. Was it helpful, Sudhir?
Yes, Eric. Thanks a lot.
Absolutely. And we all make mistakes, and you're going to make mistakes. But you don't be afraid for that, right? Just make sure that you have a big enough buffer. If you're doing a flip and you're making $10,000-$15,000 profit from the beginning, yeah, you should be scared shitless. Pardon my language, but you should be scared shitless because you're gonna run over that budget.
Right.
And that's why I allow myself $100,000 budget. $100,000 buffer. I do not go over 70% of the after repair value. If I sell it for $1 million, I will not spend more than $700,000 on that house. Because now I can drop the price. I'll show you one more property that I thought I was going to make a killing on, and I tell you what I made on it. What's his address now? See, I already forgot about it because it was so terrible. So let me. Oh yeah, here. And this comes up every time. One of these days, the wholesaler will be on the call. Anyway, so this property, I bought this property. It was presented to me for I think $850,000. I went back to the wholesaler and said, I can do it for $750. When I ran my numbers at first, I could do it for $850. I was going to make good money at $850. But I still negotiated it down to $785. That's what we settled on. Right? Now, you can see here, despite the fact that I sold it for $1.2 million, I had an ARV on that. I had pulled comps, and I had pulled comps conservatively. I could sell this for $3.9 million. All the data supported that. All the data. But we sold it, we settled for $1.2 million on this house. We took the entire roof off and had fire damage. I, to this day, still think we did a fantastic job. We did automation in this house. It is wired for alarm system, it's wired for speakers, it's wired for high-end TV, all of that good stuff, right? We did a fridge, see if it needs. We did the fridge, we did all of this appliances, everything was in here. If I would not have negotiated the price from $850 down to $785, I would have lost money. I made $60,000 on this sale, and I was going to make $360,000. But because I had a buffer, I could sell it for $1.2 million and not for $1.39 or $1.4 million. And that's why I want you to have a buffer, right? Because if you do the slides that I didn't show you is how I do research. And what I didn't show you, which is part of what I told you earlier, but if you look at Raleigh and you ask Raleigh, and you ask in Durham, are the house prices dropping in Durham? Yes. Are the house prices dropping in Raleigh? Yes. Should you be scared of that? No. But you do need to make sure that you have a buffer in your sales price. If you're buying a flip now and the ARV says, oh, you can sell it for 200,000, and you're thinking, you know what, I can get 220. You're doing it the wrong way. If my ARV tells me I can sell it for 200, I am calculating that I will sell it for 180. And if I make my profit at 180, I'm going to be super happy if I sell it for 220. But right now, you need to look at your ARV, the after repair value, and say, I'm taking 10% off of that, and or $20,000 or $30,000, and I will sell it lower. Go to the lower end of the ARV. Don't go to the higher end, because properties are trending slightly down, and you're going to hold it longer.
Okay. Thank you, Eric.
Yeah, absolutely. Anything else? So, for those that missed it, June 13th, it's free for everybody, but you can register on the TRIA website. June 13th, we're going to do a show and tell. Here, let me show you where you find the data. I just walk into the new builds that I have, or the projects I have in 5 Points, North Raleigh. We can look at as many properties as we want. If you go to TRIA, it's here on the event page. This is what we're doing now. Here on the event page, there it is. The main meeting is June 13th. If you lost it all, there's going to be 4 builders that are going to tell you, or 4 different investors that are going to tell you how they will build $1 million again if they had to start from scratch. I really like this one as well. But here is the hands-on tour with me on June 13th. So if I don't see you there, I hope to run into you at one of the TRIA meetings. I appreciate everybody's time. Have a good night. And I hope that tomorrow night, let's go Canes. I hope they win.
Thank you, Eric.
Thank you.
Thank you, everybody. Thanks for joining.
Thank you. Take care.